GST was introduced in India now 7 years, 10 months ago. This is an indirect tax reform which has many parallels in the world. Almost 170 countries in the world have VAT system, value-added tax system. We initially had VAT system, central VAT and state VAT system, and then we had in July 2007 we introduced a GST. So GST was supposed to bring in higher revenue productivity and an incremental economic growth also. With higher revenue buoyancy, an output effect was supposed to be created with GST. But if you see the experience of the last about 8 years now, one can see that the GST revenues are still stagnating. It is below potential. Not only below potential, it is even lower than what we could have generated from the taxes which got subsumed in GST. On an aggregate basis, if you see the growth rates of those taxes like central excise duty, service tax, state VAT, etc., which got subsumed in GST, they could have grown even at a faster rate without if the GST was not there. So, as a proportion to GDP, the GST revenues are maybe around 6.9% in 2023-24 financial year. In the initial 5 years, the period which states got a kind of agreed assured revenue of 14% annual growth. In that period, the actual collections, including the cess, was 6.2% in the average of the 5 years, which is much below the pre-GST era level, which means that GST has not brought about the additional revenue which it was supposed to bring in. This is because of the structural issues of the GST. We have a multiple rate GST. There are 6 rates. If you include the exemption 0, then we have 5% rate, 12%, 18%, 28%. Then on demerit goods, we have a cess being applied. And then there are some special rates for precious metals and all. So it's a very multiple rate structure, and the base is not very wide. Many items are excluded from GST, like petroleum products, real estate, in the sense if you buy a ready-made property or a land, GST is not applied. Petroleum products, which are a major revenue source for the central and state government, there the GST is not applied. And then the non-fee based financial services are also practically excluded from GST. So because of the low base, multiple rates, and a lot of complexity in the administration and other issues involved, the GST structure we have is not a perfect one. So it is one of the more complicated structures in the world now. You can see in many other countries where the New Zealand introduced a modern VAT system, where they have a single standard rate and a big base, wide base, and a kind of a threshold, a registration threshold, which is low, which is very comprehensive base and all, and they could bring in revenue buoyancy. So the average GST rate in the country, if you see a weighted average rate, a committee which was set up before the introduction of GST, which looked to the GST base and all, they found the weighted average GST rate to be 15 to 15.5%. But over the years, we have cut the rates of a large number of items, more than 500 items. The rates have been cut, and now the GST annual, the average rate is around 11% or so, the weighted average rate. So the revenue neutral rate, what was called revenue neutral rate and the current rate, there's a difference. But the question is, are we going to increase the rate again? But if you increase the rate again, my opinion is that it will be a bad idea, because already the consumption sector in the economy is weak. The private final consumption expenditure growth, even in the last financial year, was below the GDP growth rate by around 4 percentage points, which means that the consumption boost is very important for the economy to have a sustained growth rate. Now there is a cyclical slowdown in the GDP growth rate, and it has structural problems also. So in this context, we may not be able to increase the GST rates. So can we reduce the GST slabs? We should look at a comprehensive restructuring of the GST system. The GST base should be restructured, the base should be widened, and we should have the number of GST rates should come down. If not a standard rate, Standard rate may have some regressive characteristics in the Indian context. We may not be politically or even economically mature enough to have a standard rate of single standard rate. But we can at least have two rates. We can have a merit rate and then we have a standard rate. And with the weighted average rate being around 10%. If a weighted average of 10% means a low benign rate, that benign rate will improve revenue productivity, revenue buoyancy will increase, revenue yield from GST will increase, and that will have an incremental growth push will be given by GST. So what we have to look at is now have a comprehensive restructuring of the GST so that the structural issues can be addressed, the administrative issues can be addressed, and other issues, as I mentioned earlier, like some sectors being real estate, petroleum products particularly, being out of GST, whether they can be brought in the context of GST. But for states, GST also poses some additional challenges because states have already lost a lot of fiscal autonomy with the introduction of GST. States were given, now they have a half share, 50 to 50 ratio. The revenue shared between center and states on a common set of common base. There is a common jurisdiction also. Both states and center are simultaneously having jurisdiction on GST. States are also getting a share from the divisible pool, which goes to GST also goes to the divisible pool. And GST is a more revenue important item. In GST, revenue is a more important item for states than the center. For center, if you say the total inflows to central exchequer, around 18% is the GST. If you look at all inflows, including borrowings, tax inflows, non-tax, everything. But for states, it may be higher. Their own tax revenue, GST has a higher share. So it is very important that GST's productivity, GST's revenue productivity, sustained growth, high growth for GST productivity is very important for states to avoid a fiscal stress. For a fiscal recovery of states, the GST restructuring is very important. And state and center should coordinate in a more democratic way. The GST structure can be redesigned and appropriately structured so that the revenue buoyancy will increase and center and states both will benefit, and it can be used for productive expenditure as well as welfare expenditure.